You think markets are going crazy now? Wait till you see most dramatic market swings ever recorded, and the real reasons behind them. Buckle up, because even experts never saw these coming. Number 10. The 2010 Flash Crash. On a sunny May afternoon in 2010, the US stock market took a stunning plunge, losing nearly $1 trillion in value in a matter of minutes, only to bounce back almost as fast. This wasn't your typical slow-burn meltdown. We're talking about trades happening so rapidly that prices seemed to vanish into thin air. Investigators later pinned much of the blame on high-frequency trading algorithms that went haywire. It felt like robots running wild in a digital market jungle, reminding every investor that technology can bolster or devastate a market in the blink of an eye. For many, it revealed just how fragile the system can be in an era dominated by split-second computerized trades. Number 9. The 2021 GameStop Rally. The internet turned one unassuming video game retailer into a stock market sensation. Early in 2021, a group of online traders banded together on social media to pour into GameStop's stock, sending its price soaring far beyond what analysts thought was rational. Everyday folks suddenly became armchair hedge fund warriors, using memes as their battle cry. Then, almost as quickly as it inflated, the price deflated as trading platforms restricted purchases. The result? Eye-watering gains for some, jaw-dropping losses for others, and an avalanche of heated debates about fair market access and the powers that be. It was proof that the crowd can still tip the scales in an era ruled by massive financial institutions. Number 8. The Nifty 50 Craze of the 1970s. Picture a group of stocks so beloved and seemingly bulletproof that investors thought they could never drop. In the early 1970s, blue-chip companies dubbed the Nifty 50 were all the rage. Names like IBM, Polaroid, and Coca-Cola were considered sure bets, and their valuations skyrocketed. But as the economic winds shifted, thanks to rising inflation and global unrest, even these market darlings tumbled back to earth. The lesson was clear: no stock stays magical forever, and hype can sometimes overshadow genuine financial analysis. While the collapse wasn't as sudden as a flash crash, it served as a prolonged reminder that no company is immune to reality. Number 7. Japan's 1980s asset bubble. Once upon a time, Japan looked unstoppable, boasting sky-high real estate and surging stock valuations. In the late 1980s, Tokyo's real estate was worth more on paper than all of California. Fueled by easy credit, speculation soared until the bubble hit its peak and inevitably popped in the early 1990s. When the dust settled, Japan fell into what's famously known as the Lost Decade, a period of stagnation and deflation. Many had assumed Japan's rapid rise would never end, but the abrupt downturn proved how a strong market can overextend itself in the blink of an eye. Even with world-class technology and industry, over-speculation spared no one. Number 6. Tesla's meteoric rise, 2019 to 2021. Few companies have captured investor imagination as much as Tesla. From humble beginnings, the electric vehicle pioneer's stock soared to heights unimaginable for an automaker within just a couple of years. Constant innovation, flamboyant leadership, and a future-focused narrative turned the company into a market darling. As the share price climbed, many longtime believers felt vindicated, while skeptics insisted the valuation made no logical sense. Though the stock has faced its share of ups and downs, Tesla's story remains a standout example of how powerful buzz, big dreams, and public perception can catapult a company to stock market superstardom overnight. Number 5. The dot-com bubble of 2000. At the turn of the millennium, the internet promised to change everything, and eager investors poured money into tech startups with barely a business plan. Pets.com, Webvan, and countless others became household names before making a single dollar in profit. Stocks soared on expectations of unstoppable digital dominance, until reality struck. Most of these companies collapsed, causing massive losses almost across the board. It was a harsh lesson in how speculation, fueled by grandiose visions, can inflate a bubble that ultimately bursts. The dot-com crash, however, did pave the way for tech giants that emerged stronger and steadier. proving that from chaos can come true innovation. Number 4. The 2020 pandemic crash and rebound. In early 2020, global markets nosedived as uncertainty clouded the world. People feared the worst not just for economies, but for everyday life. Trading floors looked shell-shocked, and companies rushed to preserve cash. Then came an unprecedented intervention. Governments and central banks injected trillions of dollars to stabilize the system. Surprisingly, the markets rebounded faster than almost anyone anticipated. Certain sectors like technology and online retail soared to new highs, leaving many people stunned. The turbulence showed how external events could dramatically reshape financial landscapes, and how monetary policy can boost markets in ways no one would have guessed before. Number 3. Black Monday, 1987. On October 19, 1987, known as Black Monday, stock markets around the world sank in a swift, brutal meltdown. The Dow Jones Industrial Average plummeted by over 20% in a single day. Investors panicked, and fear fed on itself like a wildfire. Automated trading strategies, a relatively new concept at the time, magnified sell orders. Yet the global economy, surprisingly, recovered quicker than anticipated. Many concluded that technology-driven selling and investor psychology combined to create a perfect storm. Black Monday became a stark reminder that massive drops can happen in a flash, and that resilience can still come in the aftermath. Number 2. The Great Crash of 1929. Arguably the most infamous crash of them all, the 1929 collapse signaled the end of the Roaring Twenties, an era marked by booming consumer confidence and easy credit. In late October of that year, panic selling on Wall Street led to a catastrophic decline in stock prices. As panic spread, the ripple effects took hold across the global economy, contributing to a wide-reaching economic slump. For many, it felt like the era of endless prosperity had vanished overnight. While multiple factors fueled the situation, over-leveraged investors, questionable banking policies, and a lack of safety nets, it ultimately reshaped economic policies and the way governments approach financial crises. Number 1. 2008 Global Financial Meltdown. In terms of global reach, few crashes compare to 2008. Triggered by a reckless housing bubble in the United States, underpinned by complicated financial products known as mortgage-backed securities and credit default swaps, the fallout spread worldwide. Major banks wavered on the brink of ruin, and some collapsed outright, sending shockwaves through every corner of finance. Governments stepped in with large bailouts, sparking controversies and debates that still rage on. This meltdown served as a sobering reminder that the world's financial system is deeply interconnected. The turmoil eventually led to a more watchful regulatory environment, though opinions differ on how much has really changed. If any crash demonstrated how modern finance ties us all together, this was it. These dramatic rises and falls teach us that no market is ever truly too big to fail or too small to ignore. From day traders to global banks, everyone feels the reverberations when sentiment swings like a pendulum. The key takeaway? Always approach markets with a healthy balance of optimism, caution, and an appreciation for history's lessons. Because if there's one thing the past shows us, it's that shocks and surprises happen more often than we might think. Thank you for joining this trip through the wildest stock market moments. If this gave you a fresh perspective on finance, or if you just love a good plot twist, remember to hit the like button, share this video with your friends, and subscribe for more deep dives into the fascinating world of money. Make sure to ring that notification bell so you never miss an update. We appreciate you watching and can't wait to explore more intriguing topics together.